AIM-listed tech company Seeing Machines, which designs AI-powered driver monitoring systems to improve transport safety, has recently announced that it has extended its supply agreement with Xilinx, which the company says will end up cutting the hardware cost. Additionally, Seeing Machines has also said that it's expanding its network of distributors. All good news for investors. Let's talk now to the Chief Executive, Paul McGlone, who joins us here in the studio. Paul, it's good to talk to you.
You too. Morning.
It's been a while since we've spoken to Seeing Machines, and I know a lot has happened recently. You, of course, took over as Chief Executive earlier on in the year. Let me just quickly ask you to update investors on where the company is now as you see it.
Well, we're in a completely different place from where we've been in the last few years. So we've moved far beyond vision and early stage, and we're now very much focused on delivering complicated programs of work with what are frankly some of the world's largest organisations in automotive, fleet and aviation.
Okay, well, I want to break those three down into some more detail in just a minute if I can, but I want to begin first of all with this news recently that went into your Capital Markets Day with this good news that you've got this Xilinx agreement extended. How critical was that, and what does that bring to the company?
It's very important for us. As we've said before, we've won 6 OEM contracts and we have 9 programs running with those 6. About a third of our work is delivering the chip. Now, what we would have to do in the absence of this deal is we'd have to stand up a supply chain, put in place the systems, new people, carry stock, warehousing, shipping, risk management. This deal sees Xilinx running all of the physical product through the supply chain that they already have in place. So that de-risks our business quite considerably. The other advantage is, of course, most of the OEM customers and the Tier 1 customers, I should say, that buy our product, have existing relationships with Xilinx. So that materially simplifies the procurement task.
And all this, of course, as I said, I think at the top, that you end up with a lower cost base.
Lower cost, lower risk.
Yeah. Okay, let's also take a look at what else has been happening, because you've also been expanding this network to distributors. Now, you mentioned at the top that you are in 3 main areas: automotive, fleet, and also in the aviation business. What sort of distribution network are we talking about here when looking at the expanded network of possibilities?
So when we refer to distributors, we're really referring to fleet. So today we sell our product across 24 countries. We announced earlier in the year that we've recently signed a UK-based distributor who we're very pleased with, and they're beginning to create some real progress. We signed an agreement that we announced in our recent announcement with an organisation that specialises in oil and gas, so that's a very good market for us. We have distributors in Australia, New Zealand, Southeast Asia, Latin America, and we have really solid demand from new territories coming to us all the time. So distribution is 70% of our sales, the other 30% is direct, and I see distributors being very important to increasing our growth rate.
Amongst the retail investment community that you've got, are you able to talk about names that we would know that use the products that Seeing Machines provides?
Sure. Look, in fleet, we announced National Express, which is a very well-known bus operator here in the UK. Back in home turf, a company called Toll, which is our largest transporter, owned by Japan Post. We recently announced Bison in Canada. They've been nominated North America's safest road fleet company for many years in a row. So for someone like them to take on this technology, it's a really strong endorsement.
And the technology, what, reads faces and basically alerts through alarm systems, which if there's a problem with potential sleep inducement within a cab.
Indeed it does. So our aftermarket product that we use in fleet observes the face and importantly the eyes. We detect fatigue, microsleeps and distraction. We alert the driver in real time. If there is a microsleep, our system enables a vigorous vibration in the seat to wake the driver. Simultaneously, we'll send a message to our 24/7 Guardian Centre. That message will be assessed with a short video of the event, will inform the fleet manager, and that fleet manager will immediately intervene in that truck and ask the driver to pull over. That's what we call the fatigue intervention plan. Right. In real time.
Talking about the fleet, there have been some issues with fleet. Now, my understanding is it actually came off the market for a while, didn't it?
Yeah, so more than a year ago now, we had a range of issues. We had supply issues, we had some technical issues that we needed to resolve. We also had some commercial issues. So I came into the business a year ago specifically to focus on those. The technical issues have been resolved. As everyone has now seen, we dramatically increased our rate of installation of these units between December last year and June this year. That rate of improvement continues. The good news is that we have a very unique product and very strong demand all over the world. So the latest announcement about reducing the cost of that unit, that's very significant because that drives cash. And so we're quite pleased with
And
that.
is fleet the largest part of the business, the largest input?
At the minute, it is the largest by far, and it will remain so for the next few years. It's our growth rate is north of 50% per annum. Right. And we hope to see that expand. And
of course, aviation's been around a while, hasn't it? We don't hear too much about that part of the business, but I think it's been around about 4 or 5 years, isn't it?
It certainly has, and you're going to hear a lot more about it. It's one of those industries where you can't walk into an aircraft manufacturer or a tier 1 manufacturer in that sector, knock on the door, give them a good idea and expect them to sign a purchase order. This is a very technical sell. We're changing opinions and behaviours in technical teams, commercial teams. But over that last 5 years, we've moved the needle considerably. The most prospective opportunity for us in aviation is selling our technology in the pilot training simulator environment. And we have very, very strong interest across manufacturers, tier 1s and flag carriers.
What about automotive? What's the up-to-date news there for investors to really get an idea as to how the business is going? Because this is quite something that I think perhaps maybe people might be more familiar with. If it goes into cars, the chances are we'd interact directly with it. Yes. As the public.
Yes, indeed. So look, we have won 6 OEMs and 9 programs. What I've said recently is that our focus in automotive has been up until now to really pitch our technology and our offer towards the premium end of the market. In that regard, we've been very successful, both in Europe and North America. The automotive market is characterised by very long lead times. We get involved in new car design, and is often 2, 3, 4 years before our product, actually hits the road. So, of course, we are on the road with the Cadillac CT6 in the US. It's very, very popular in terms of its technology. And look, we are very bullish about our automotive business. It's a competitive market. We deal through tier 1s into the OEMs, so it's not just a direct relationship with us. There are lots of moving parts. Technology is moving very rapidly. But external researchers believe that driver monitoring systems will be in 70% of vehicles. Now, there are 100 million vehicles a year manufactured, and many times that in the total market. So no matter what percent penetration you want to look at, for us or anybody else, we're talking very, very large addressable markets.
And are you talking to some of the big manufacturers? I'm talking here BMW, talking about the top end here, BMW and the like. So who are you talking to?
So we don't name the OEMs specifically. We're not able to do that until those cars hit the road. Right. So Cadillac CT6 we can talk about, but we are talking with premium carriers, premium manufacturers in Europe and North America.
Okay, well, we'll look for more news. I just want to quickly bring up the share price if we can.
Sure.
This goes back to the beginning of this year, and in fact the share price has pretty much retraced the point at which we were at the high point of 5.5 pence back in March this year. Since then, this vertical blue line is the point you took over as chief executive. So shares have risen 50-80% or so since you took over. What do you say to investors that are looking at this at, 150 odd million pound company?
Well, look, I think if you look at the addressable market that we just talked about in automotive, And if we then add on top of that the value of a long-term recurring revenue stream that comes out of fleet and the kind of geographic growth through new distributors that I've also mentioned, and then if we consider the aviation business and the fact that we are talking very high average selling price and long-term recurring revenues, our view of our business is that there's substantial value here. Now, I think it's fair to say we did a capital raise last year, and there are a lot of shareholders quite unhappy with that. It's a strong dilution effect, but it has put the balance sheet in a position that is enabling us to deliver on these three verticals today.
And what about, what can you say to investors about the need for more capital, how you go about it? You've seen the negative effects, as you said, on the share price with the last raising. Would you do things differently as your CEO now, or if you have to come back to the markets, is there no other way of doing it?
Well, look, we are doing many things differently, and the primary thing is that we have the whole organisation focused on profitable business and cash management. So we now work on a 3-year planning cycle, and what I've said to the market before and what I'll reiterate is that we don't see in our 3-year planning cycle any further need to raise equity for working capital. So that's a position that we've been able to deliver by focusing on cash, fixing the fleet business, reducing the cost of our fleet product, and managing cash better in all other areas.
Yeah. Okay. So, what's the outlook looking like as we go into 2020?
Look, for me, the outlook is all about delivery in automotive. We don't expect automotive production volumes until 2022, but after that, the volume is quite exponential. So between now and then in auto, it's about delivery, delivery, delivery. Fleet. We are growing at a very good rate. We want to increase that growth rate and continue to drive the recurring revenue streams that it delivers. And the next area is in aviation. We've changed the model in aviation. We won't be manufacturing units. We are seeking licensing arrangements with significant parties in that supply chain. And again, that's a recurring revenue business. So I expect revenues from aviation to be pulled forward, well before automotive.
How do you see the competition building in that same period? Because this clearly is a very competitive market, moving at a very fast rate.
It is.
10 years ago, we hadn't really even heard of this sort of technology. The other thing, of course, is if you are that successful, do you envisage the company receiving takeover offers from large motor manufacturers who want exclusive use?
Oh, that's an often asked question. In terms of competition, there is competition. We would argue that we have a very high-performing technology relative to that competition. The real question is, how is our technology sold in automotive? And it's sold through tier ones, and it's not all about the technology. It's often about the price of the whole unit that the tier one is selling on to the car manufacturer. So there are many dynamics at play there. In terms of our fleet business, we have a head start. I'm sure competition will emerge there, but we have plans for generation 3 and 4 products. Aviation, I think we are in the driver's seat, so to speak, or perhaps the pilot seat in this case. So having that balanced portfolio, I'd say, provides a real advantage to investors.
Well, look, it's a pleasure to talk to you, and thanks indeed for coming in to take a look at Seeing Machines,
My
share
pleasure.
price, and the outlook as well. That's Paul McGlone, the Chief Executive of Seeing Machines.
Thank you very much.